I'll be talking about our expectations from the budget which is scheduled to be released tomorrow. So we are expecting a fiscal deficit of 3 to 3.2% for financial year 18, and for financial year 17 we are expecting the government to achieve a 3.5% fiscal target that was basically set for the year. Now talking a bit on financial year 17, so what we are going to see is that overall tax collection has been higher than what the government was budgeting, and that is primarily being led by higher indirect tax collections, so particularly in terms of higher excise duty and service tax collections. And also there is a gain on the personal income tax front, primarily arising from the disclosure schemes that government launched in financial year 17. So that seems to have resulted in a additional gain of about 40 to 50,000 crores for the government, and that has resulted in a sharp rise in the tax revenues. On the spending front, we are expecting capital expenditure to be on the lower side. This is just to highlight. This is lower versus the lower number that government had budgeted for financial year 17. So what we are seeing overall is that capital spending by the government as well as by the private sector is trending lower, and we expect this trend to persist for the next couple of years as well. In terms of collections from the disinvestment and the telecom auction for financial year 17, again we are expecting that government will be undershooting the target quite significantly. However, we still expect fiscal deficit target to be achieved, primarily, like I said, there is higher tax revenue collection. Now talking about financial year 18, so we are basically expecting a tax growth of about 11 to 12%, and it is on the lower side because the base for financial year 17 is quite high. So financial year 17 growth is expected to be around 17 to 18%. In terms of the focus from the government, we are expecting it to be slightly populist. Income tax SOPs could be there, however we are not expecting the income tax SOPs to be substantial, and we are not expecting a significant focus on the capital spending. So what we are anticipating is that government will continue to focus on fiscal consolidation, so consolidate from 3.5% to 3 to 3.2%, like I said. And the fact that they will be consolidating, they may not have significant room for spending across the board. So they will try to give giveaways to all these sections of the economy. So some gains towards the rural side, some bit on the income tax front, and some bit of increase on the infrastructure spending. However, we don't expect it to be significant to actually result in increase in the growth levels. So what we are saying here is that it is not going to have a significant impact on the growth per se, as well as from the equity markets point of view, because markets have rallied quite a bit, discounting a lot of optimism from the budget, as well as somewhere anticipating that demonetization has not had a major impact on the company's earnings. Just one last thing to highlight here from the demonetization. So if there were significant gains from demonetization for the government, government could have gone on spending spree, and there would have been giveaways for all the sections of the economy. However, because there are not expected to be significant gains from demonetization, we are expecting all in all giveaways to be pretty muted. So yeah, that's about it. Thank you.